So what would have to happen if we did a capital call? So there's two types of capital calls. There is the capital call where the general partner asks you to send into our bank, usually to wire into our bank, the commitment you made to invest in our shopping center or invest in a fund. That is an initial capital call. There could be subsequent capital calls for an investment that occurs after your first capital call. That's called a subsequent capital call. Generally, that's not a good thing. Rockstep Capital has never had a capital call after your initial capital call. Why could you have a secondary capital call? You could have it if there's a problem in your investment. So there was an estimate of how much equity you would need for your investment to achieve the returns, but a problem occurs and you need more cash to get a tenant in, to avoid a problem, to avoid a foreclosure from your lender. And the document that each investor signs, their private placement memorandum, says that the general partner has a right to call on your capital even after you've invested your initial amount. As an investor, you have the right to send more money in, or you have the right to not send more money in. If you don't send more money in because you don't want to invest further in that asset or that fund, then there is some dilution formula that is described in the legal agreements.